Thank you so much to the attendees for joining in on time. We will be starting with this session in just a minute. Hello, everyone. I am Kavita Agrawal, the founder of EXP Invest. Today, we are here to discuss about RSI range shift. Now, we all are aware of what RSI is, but what is range shift? Now, I've been requested to do this session by one of our repeat attendees because RSI range shift is a phenomena that I have been mentioning repeatedly in the process of my chart reading and analysis that I do for all the audience during these ET live sessions. And I thought it would be a good idea to take advantage of the Let's Get Technical series where I bring to you technical analysis related knowledge and dive a little bit deeper into what RSI range shift exactly is. So we will start off with a presentation where I will take you through some basics of what is RSI, some research out there, give you the basics of range shift, and then swiftly we will move over to the charts to practically make some observations of this phenomena across different time frames like weekly, daily, 75-minute, 15-minute, 3-minute. All the analysis is going to be live, and at the end of the session I will take 10-15 minutes to answer your queries. So please, if you have stock queries or stock questions about any particular stock in this market for me, feel free to drop them in the comments, and right after the session we will jump into those queries for you. So without much delay, let's get started with the session. So let's understand RSI range shift and its applications in technical analysis. But first, what is RSI? Many of you might be aware that RSI is nothing but relative strength index. It's a momentum indicator. It's one of the leading indicators and also one of the most commonly used indicators. What makes it so special? What the RSI basically does is it measures the strength of a stock's price action against itself and helps to predict potential future performance. So relative strength, we usually talk about relative strength in the context of different assets or different indices or different stocks. But relative strength index, the essence of the indicator, the formula of the indicator enables it to judge or measure the speed with which the price is changing in a certain time period, which is usually set at 14, against whatever is happening right now, or rather the speed of the change of price that is happening right now with the period which is set in the formula for the RSI, which usually by default is set at 14. So that's RSI for you. But how do we interpret RSI? So like I said, it's a momentum indicator. It takes into consideration the speed with which the price of any underlying index or stock is changing. Of course, it can be used across commodities, currencies. It can be used on anything in which you have price or which you have data being plotted. Now it measures the speed and the change of price movement. The levels, divergences, and range of oscillating are all interpreted to get desired results. What does this mean? It means basically that which level is the RSI standing at right now. Whether the RSI has shown any divergences with the price in the recent history, or what is the range at which it is oscillating. All of this can be interpreted. In today's session, we are specifically dealing with the range of this oscillation of RSI in different market types. Now, what is this RSI range shift specifically? So we know that RSI is bound in a 100-point range. That is, RSI by formula cannot go beyond 100 or lower than 0. Correct? Now, within this range, RSI adheres to different sets of ranges in different market dynamics. So, for instance, when there is a bull market underway, then depending on the time frame where you're observing this bull trend, you will easily be able to observe that RSI has shifted to a range of 40 to 60 plus or 70 plus. Basically, RSI begins to take strong support at the level of 40 on the time frame that you're observing and starts breaching upwards of 70. Now, this changes in the bear market because the RSI starts taking resistance at the level of 60 and starts breaching the level of 30 repeatedly. We will take a look at this in a bit, on the practical charts. But here's a very interesting anecdote. Now, I have been observing RSI range shift, applying it, studying it since many years now. I don't even remember where the inception was, but just for some fun, I asked ChatGPT about it. Now, I gave multiple prompts on this topic, but ChatGPT could not find any research out there. So, while I believe that RSI range shift is something that I've studied and gotten inspired from, of course, there are lots of great analysts out there who've covered the topic of RSI and its various behaviors and observations repeatedly. For instance, of course, Andrew Cardwell's there, Wallace Wilder's there, Lanny Connors is there. There's also Constance Brown, whose name is not mentioned. Within India, also, we have some great analysts who cover RSI extensively. However, the phenomena of range shift has not been spoken very extensively. So, this topic, if you are attending this session, then I would love to hear from you what you think about it, because this is the first time that I am speaking about RSI range shift publicly. And honestly, I have not heard anyone else talk much about this particular observation of the RSI's behavior. But let me tell you, it works beautifully. All right. So, what are the signs of range shift? So, usually this range shift that happens in RSI happens with some other phenomena which can be observed, which act as secondary evidences or confirmations to the phenomena of range shift. For instance, firstly, you might observe some price consolidation near potential support or resistance zone. Now, like I told you, range shift can be both bullish and bearish. So naturally, in case of bullishness, you might observe some consolidation near the support zones. These support zones may come from some exponential moving averages, may also come from trend lines. And it is in the phase of this consolidation that the RSI will show you a probable divergence, and in delivering that divergence, it shifts its range, starts taking support at the level of 40. Now, there is also a sharp increase or decrease in volume. So, usually when there is a negative divergence, that is when the RSI is coming back down to, a bearish range of taking resistance at 60 and going below 30 repeatedly. That is when we observe a decrease in the trading volume, which shows us that the interest in a particular stock or sector is now on the decline. All right, let's move on. So the benefits, pretty straightforward. What are the benefits? It helps in identifying new trends pretty early on. Now let's move on to the charts, because I'm very excited to share my analysis with you. Okay, so I can take a look. I can see Rohit Bhardwaj ji has said that he usually takes positions when the RSI reaches 61. So Rohit ji, would you also share what time frame are you using, and what is the period of your RSI, like whether it's a 3-period RSI, 14-period RSI, or like me, you're using a 25-period RSI? That would be very helpful to add context. So this is the 15-minute time frame that you can see on the chart of Nifty, and now I've shifted to the 75-minute time frame. So on the 75-minute time frame, the phenomena of range shift is a lot more prominent. So I'll just give you an example. Now here you can see, now of course, let me tell you at the starting that RSI range shift is not very exact, like pretty much everything else in technical analysis. It's not very black and white. There is some guessing involved, especially when there is a shift happening. But once it has happened, especially in hindsight, it becomes really, really clear. So now here you can see that RSI was, so here, even though the price has not changed quite uh, significantly, let me just turn that off. Yeah. So even though the price has not changed significantly, RSI has moved up from the level of 30 to the level of 44, 45, etc. So I just saw the comment from Manohar ji where he's asking which time frame RSI going above 70 is more effective for buying stocks. So Manohar ji, I am a swing trader and my time frame is usually, so I make my decisions basis the 75-minute time frame, right? My holding period is around 2 weeks to it can go up to 6 months also sometimes. Usually an average of 2 to 3 months. So I use 75-minute time frame. And what you are asking, RSI above the level of 70. So I wouldn't take a position, active position immediately if my RSI is above 70 on 15-minute or 75-minute time frame. However, if it is on the 3-minute time frame, I might still take a position. I prefer to time my entries in a very proper manner. Basically, years of experience has taught me to place my entries almost at lows, because of, and if you're taking an entry when RSI is at 70, you're basically entering a probably very heated stock. You can understand that above 70 there's not much more room to go. And yes, there are times when RSI continues to remain overbought for a very, very long time. But if you take a look at it statistically, it's not very often. So you might be on the wrong side of probability if you're constantly taking positions when RSI is going above 70. So sure, stocks give spikes and RSI goes above 70 very well, but from a risk reward ratio, you'll do better when you wait for RSI to kind of cool down. And so I use TradingView for this purpose, and TradingView allows me to set up alerts across my indicators, even RSI, and I use that, and I wait for RSI to come back to the level of 40, 45 if the momentum is very strong before I take a fresh position. All right, so coming back to the discussion, so here you can see this channel that I've just drawn. Let me just make this thicker for you to be able to observe better. You can see that RSI here was very, very bullish, and I'm also going to draw for you some vertical trend lines. Sorry, just at the beginning and end of this zone. So I'm going to make this totally solid, and I'm going to mark it with these teal vertical lines. Now you can see within the teal vertical line that as long as RSI was above the level of 40, there was a very strong bull trend in Nifty also. But then soon enough, RSI broke below the level of 40, and it started falling lower and lower, taking resistance at the level of 60 here, and on the downside it was taking support at the level of 30, right, until it breached above the level of 70. And if we draw a vertical line there, we can see clearly that this is where a new bull trend actually started in Nifty. So on the chart of Nifty itself, we can see that this phenomena of range shift on the 75-minute time frame works extremely well. Now, you also need to consider the period being covered here. So here, this first phase covers around 66 days of data. The next phase covers around 108 days, and the next phase covers 57 days. So if you prefer to trade shorter time frames or shorter holding period, then it's beneficial for you to move one time frame lower to the 15-minute time frame, same. Now, I would also like to remind you that I don't use the 14 period RSI, I use the 25 period RSI, The reason for that has been covered multiple times in my previous videos. If you would like to know, or if you'd like to watch them, then I would suggest that you just hop over to my YouTube channel. I've linked it in the comment, and just go over the videos that I've covered on various topics, and there's a playlist dedicated to Let's Get Technical. Just check out the videos, and I'm sure you'll find a lot of content on RSI and the reasons why I use 25 period time frame instead of the 14 period time frame, 14 period RSI. Coming back, so the 15-minute time frame, right? Now on the 15-minute time frame as well, if I draw the parallel lines, you can see here there is strong bullishness, right? Here, okay. And so see, until here there was a lot of bearishness, okay. So let me draw a vertical line here. Now you can see the point exactly where the trend turned bullish and RSI started going above the level of 70, right? Above the level of 60, touching 70s and plus. And on the downside, when it came down for a correction, it sort of stayed above the level of 40. It barely came down to touch the level of 30, whereas previously when it started correcting significantly from here, basically you can see that RSI was clearly going below the level of 30. So it's a very simple observation, but when you start drawing parallel channels and vertical lines in addition to this analysis, like in addition to just doing the naked eye observation, these things start coming into perspective and it starts making more sense. So when I started off using RSI range shift, I was drawing a lot of parallel channels and I was drawing a lot of vertical lines, because that basically helped me train my brain, train my eye in spotting these RSI range shifts. Now thankfully I've reached a state where I no longer have to draw these vertical lines and these parallel channels, because I am now adept in identifying the range shift as it is happening. Now I remember I also told you that when the range shift is about to happen, you will observe some divergences. So on this 15-minute time frame, if you see the RSI, so the price basically formed a low for you around here, okay, but parallel adjacent to this low, if you see, RSI has already come to the level of 40. Now this itself is a positive divergence, and the RSI range shift, as you can see, is a very good confirmation tool, right? So when I see this strong positive divergence, what I would do is essentially make a position in a stock. Now if you've been associated with me a long time, I'm not an F&O trader. So even though I'm using the example of Nifty here, I don't trade Nifty, I don't take option trades or future trades whatsoever. I focus solely on momentum trading, and trust me, that focus gives me immense, like amazing results. All right, so it is actually because of this strong positive divergence that I've been able to capture this whole trend, which started from the end of March really beautifully. And not just me, but the members of EXP Invest who subscribe to my swing trading services have also benefited wonderfully. So basically, when you combine different types of studies on a single indicator itself, like RSI, like divergences, range shift, overbought, oversold zones, you have to use all of them in conjunction with each other rather than standalone. So now I would just like to take a pause and take a look at the comment posted by Manohar ji. He's asking about how to identify breakouts or breakdowns using RSI. So Manohar ji, the answer to that is divergences. So RSI is a very smart indicator. You know why? Because RSI adjusts itself to a stock's or index's underlying personality. Just like people have different personalities, stocks also have different personalities. I, in my study, categorize them into 5 different personality types. Now within these personality types there is a lot of cyclicality. So a stock bottoms out, it comes out of the bottom, it rallies, then it starts plateauing, and then it starts falling. So these are the 5 different stages, and there are 5 different personalities. So at any point of time everything is dynamic, everything is changing. And this is also the reason why using too many different kind of indicators is not a very good idea, because how much are you going to keep track of at any point of time? This is also why stock analysis and stock trading, doing both for a individual retail trader is very impractical, because if you already have a full-time job or a full-time business, over and above that, if you're trying to do all this analysis that I am telling you about, which is like a small fraction of the analysis that I do, then you're really biting off more than you can chew. But anyways, coming back to this, so Manoharji, that was the response for you, that so when you're talking about a breakout, actually you're letting go of a lot of movement. But when you're taking divergences seriously and creating positions with stop losses, what you essentially do is you improve your risk reward ratio significantly. So I do not trade unless I have a risk reward ratio of minimum 3, right? And I don't hear a lot of people talking about this. I've seen most traders, even analysts, work with risk reward ratio of 1, 1.5, even 2. And even in leverage trading, I mean, it's crazy that people are willing to take so much risk with their capital, and they're okay taking risking the capital for such little rewards. Even though I don't do leverage trading, I still demand a risk reward ratio of minimum 3 on all my trades. And using divergences and RSI range shift is a very good way of ensuring that I'm entering the trades at a very, very good time. Okay, now with this, let me just take a few stock examples for you. Now, for instance, take a look at the stock of Balkrishna Industries. Incidentally, I discussed this stock just yesterday also, and it was in the discussion of this stock that one of the members, I think, went ahead and asked for a session delving more into the details of RSI range shift. So let me show you the 75-minute time frame. Let me show you on the 75-minute time frame how beautifully the RSI range shift can be observed here. So you see this uptrend that started here. Okay, we'll look at the uptrend later. Let's first look at RSI. So on RSI, you see here RSI is started taking support at the level of 40. So we're going to draw that, and we're going to extend that all the way to where we can see the RSI taking resistance. Now where we have started drawing this, let's draw a vertical line. Now you see how the price in this section, I hope you can see it. There you go. Let me just zoom that in for you. All right. So here you can see how price in this section is still falling down. But when you look at the RSI, it has clearly started to go up, which is basically giving us a strong positive divergence. So this white pin that you see, basically this white pin is where I gave a long call to my members. And then if you zoom out, you can see the beautiful rally that happened in the stock afterward. There's a 22% rally in around 120 days. And you see, this is where this rally extends till. And if I draw the vertical trend line, you see it coincides exactly where, or let me just move that here. It coincides exactly where the trend ended. Now, in the case of Balkrishna Industry, we can see there was a massive gap down, which is, a very one-off event, but it happens in the market. But you can see a bear trend ensued after that. Now, again, if we look at RSI here, let's draw another channel, and we can see that this bear trend continued until here. Let's draw a vertical line again, and we can see that right after this, when the RSI started making highs which are in line with the bull trend, the price started going really up, and every time the price fell down, RSI did come down but did not go below the level of 40, right? So again, so basically, if you've not entered the trade when the RSI just shifted, it gives you opportunities to make fresh entries when it comes and retests the level of 40. So this level of 40 is why I gave another buy call in the stock idea to my members just yesterday in the stock. In fact, one of the members messaged me saying that, the stock is still very bearish, and all I told him was, yes, it is still bearish, but I'm expecting a turnaround, and that's exactly what I saw happen in the stock today. So observing RSI range shift and keys RSI support and resistance levels help you make positions with small risk, looking out at big rewards in stocks and catching momentum better. Now, if you observe the same thing on the 15-minute time frame, now that was a 75-minute time frame, right? Now we've come down to the 15-minute time frame. So on the 15-minute time frame, the sensitivity of RSI increases naturally, because this correction that was very minor on the 75-minute time frame is actually 5x bigger. So it is in itself a good bear trend on the 15-minute time frame, and this fact is emphasized by this RSI behavior right here, where we see that RSI here maintained its own range on the 15-minute time frame, gave a negative divergence. Let me draw the vertical line here. Gave a wonderful negative divergence, even though the price made a higher high, fell down all the way to the level of 30. Now when the RSI on the 15-minute time frame has come to 30, it becomes a good entry point for me. Why? Because I know that on the 75-minute time frame, the RSI is in a bullish zone. On the daily time frame, again, if I can clearly see that the RSI is extremely bullish, because the RSI has gone well above the level of 60. It's gone above 70, and usually when RSI is doing this on the daily time frame, it's an indication that the momentum is going to continue. So sometime back, I think Manoharji was only asking about making positions when RSI is above the level of 70. But I told him that it's better to wait for RSI to cool down. So let's take an example of Balkrishna Industries here, and you can see that just few days back RSI was indeed above the level of 70. So while this is a very strong signal of a strong bull trend in momentum, it is better to not take position when the RSI is so high up and wait for it to cool down a little bit, because it gives you a better entry like it did. So for me, I'll tell you, it's very, very important that you use different time frames, not just different time frames. It's not a good idea to take this chart and change it to 15 minutes and then change it to daily. It's not a good idea, because then your drawings on the indicators get all messed up. So what I suggest is always going for these multi-chart layouts. For instance, I have a 6-chart layout where I use 3-minute, 15-minute, 75-minute, daily, weekly, and monthly time frames. Now my main decision making happens basis the 75-minute time frame, but I use the 15-minute time frame and the 3-minute time frame to echo what the 75-minute time frame is saying in a louder voice, and I use the daily time frame, the weekly time frame for the nod of agreement. It's like the family hierarchy that we see, the hierarchy that we see in our families, where when the mom says something, if like especially in a patriarchal setting, the dad may not say a lot of things, or the grandfather may not say a lot of things, but a nod is sufficient, right? Whereas when the mom is saying something and the kids agree, they get overly excited and they make a lot of noise. So that is the kind of setup that we are going out here with. So we are making our trading decisions on the basis of what the 75-minute time frames telling us, but we are also looking out for that nod of agreement from the higher time frames, which is the daily or the weekly time frame. And we also want to see that excitement in the 3-minute and the 15-minute time frame respectively. All right, so it's been 30 minutes, and this is pretty much what I had to share with you on the topic of RSI range shift. I think I have done everything. The way I have shown you RSI range shift on the Nifty chart, on the Balkrishna industry chart, if you go out and do your own analysis and research, I'm sure you will be able to find more examples. Now, there is one thing that I want to do. I want to invite you to join my Telegram channel. And if you do your own analysis and you want to, check back with me on whether your observations are correct, simply take a screenshot, and there is a chat group which is linked with this free channel. You can just paste in the chat group, and I'll be more than happy to assist you, take a look at your drawings, and tell you whether they are correct or not. I'll also be happy to pull out those charts on my own system and give you better insights. I love technical analysis, it's my passion, and I love discussing it with other people too. So now, before we give this session a wrap, I would love to answer your stock queries. So if you have any stock queries for me, just be sure to drop them in the comments one by one. Don't add cluster stock requests, because there are multiple audience members and I would like to touch upon everybody's requests. So I'll just wait for you to add your comments, and while you add your stock queries, I want to share this reminder which the ET moderator has also just shared in the comments, that if you want a one-on-one session with me to discuss either about the stock market or brainstorm about strategies which would suit you better, whether you should go for swing trading or FNO trading or long-term investment only, or say you have a portfolio which is kind of gone out of your control and you don't know exactly how to address that, and you would like to take an expert's opinion on it, I'm here for you. I am a SEBI registered research analyst, and it's literally my job to help you out if you're in a sticky position with respect to your portfolio. All right, so I can see the comments and stock requests rolling in. So let's start taking them on. All right, let's see. Okay, so Rohit ji has a very relevant question to the session. So he's asking, how do we decide when to sell? So Rohit ji, honestly, this is a bit of a tricky question. So what I prefer to do is, first, I prefer to trail my positions. So a lot of times my trailing stop loss get triggers, which takes my position out, which is a little unfortunate because I have seen that I'm missing out on a lot of upside in my trading. However, there is another method, is basically, so the art of exiting is like 100x more trickier than the art of making an entry. Okay, so few things that I can tell you is, draw correct trend lines. So in my opinion, the methodology of cloning trend lines using relevant peaks, again a session that I have covered extensively in my past videos, everything is available on YouTube. Trend line resistances make a very good exit point usually. If the stock is in prolonged downtrend, then the 200 EMA on the daily time frame or the 75-minute time frame becomes a very good resistance point and therefore a profit booking zone. Another thing is, you have to look out for key support and resistance zones. Use green bars to keep a tab on where these zones might be coming in. You also saw those green zones on the Balkrishna industry chart. So for instance, if you see these green zones, I have been drawing these, and I'll just extend this to try and get as many overlaps as I can with past zones. So this green zone that I just drew, you can see that here price took resistance, here it took resistance, here it took support, here it took resistance, here it took resistance. So clearly it's an important zone, right? So you obviously don't have to draw these circles every time, because honestly, you have to try to keep the charts as clean as possible. But you can see that this time when the price came up, it went pretty close to this zone here and then turned back down. In addition to that, RSI wise, it's a good idea to look out for negative divergences on one lower time frame, or actually it's not a good idea to look for divergences on one lower time frame. It's a good idea to look out for divergences on the time frame itself. But the problem is that if you're looking out for divergences on your time frame of decision making, then there is a good chance that you might miss out on a huge chunk of unrealized profits. So that is why it's very important to maintain trailing stop loss also. So like I said, the art of planning proper exits is way more trickier than planning proper entries. All right, so let's take a look. So Manoharji's got a question about Bajaj Consumers. So he's bought Bajaj Consumers at 180. Right now it's trading at 186. And what I see is that there is a negative divergence on the 75-minute time frame, which is not promising. Not only that, Bajaj Consumers has also come to this strong, resistance zone, but it appears like it's trying to break out above this resistance zone, which is actually a very, very good idea. So I would not suggest you to book profits just yet, because on the daily time frame also we can see that the bull trend is extremely strong, as suggested by the RSI going above the level of 70 repeatedly. So I would suggest, Manoharji, that you continue to hold on to your position, but please maintain a stop loss at the level of 183. And as far as the target is concerned, I think it can easily go up to the level of 207. However, it might not do that in this same stretch. Now, if your position is short term, for the short term, which I think it is, since you just entered the stock, it's prudent to observe the stop loss that I just mentioned, because that way it will ensure that when the stock, and it will go into correction, when it goes into correction, you don't end up being on the red side of the trade. So as we can see, there is a trend line right here, and this blue trend line is where I think the stock will want to take a support when it comes down. So basically, when you see the stock back at the level of 170 to 175, it might be a good idea for you to re-enter the stock. Now, it's very hard to predict how the stock will behave when it comes to that area. So I will suggest you connect with me on my Telegram channel. And when the stock comes to that level, I'll be happy to help you out. So that was Bajaj Consumers for Manohar Ji. So he wants to add more, right? So Manohar Ji, not a good idea to add more right now. Just wait for the stock to maybe come down to the level of 170, 175. All right. So we have Rohit Ji asking about HAL, and he's bought it at 3078 for short term. So I see a massive volume spike coming in on HAL, which is good. And so strong bull trend here. Okay, so you know what, Rohit ji, you can maintain a stop loss at the level of 3030 on the stock, because it's already given a wonderful turnaround right here. If you want to make fresh positions, I would say go for it, but again, maintain 3030 as your stop loss. Now clearly the stock is trying to go above this trend line resistance here. It has been successful, and the 100 EMA is giving strong support as well. So I think so when a stock is in very strong bull trend, when a negative divergence happens, the stock does not necessarily go into correction. It just gives a sideways consolidation and fizzles out the divergence. So that's exactly what we see happening here as well. So the stock just gave a sideways consolidation kind of, and RSI had a chance to cool down, come back to the level of 40, which is our support zone for the bull trend. And I think it's ready to go back up. So what you can do is you should continue to hold this stock for a very optimistic target of around 3400. But naturally, you need to, keep trailing the stop loss. So make sure you're checking back with me for a fresh stop loss when the stock goes back above the level of 3185. So we have Karthik G today. He's asking about NIIT Technologies and Kotak Bank. So let's take a look at NIIT first. So Karthik ji, I'm guessing that you want to make a fresh position in this stock. So let me quickly draw my trend lines here so I can help you better. Okay, that looks important, and I don't want to miss that peak. So okay, so the stock almost came down here back in October and has been going up. So the weekly time frame is looking quite bullish. Taking a look at the daily time frame, we see a very textbook rounding bottom, and the 100 EMA has just crossed above the 200 EMA, which is promising. The 75-minute time frame is saying that a very strong bull trend has already been established. I wish you'd asked me about the stock just yesterday, because I would have told you enter, because we are kind of 3% late. But if you wish to still make an entry, I would say go for it. Just that your stop loss is going to be slightly bigger, but maintain a stop loss at the level of around 380.75. And the target, as for the target, I think the stock looks pretty good to go up another 20 odd percent, which would basically mean that the level of around 480 looks like a very very probable target candidate, because of basically this resistance zone right here, right? And of course, when the stock comes to 480, if it's still showing bullishness, it would be a prudent decision to revise this target to a higher level. All right, Karthik ji, I hope you found that analysis useful. And to all the audience members, if you're enjoying the session and if you think the whole discussion around RSI range shift was value adding to you, please don't forget to give this stream a thumbs up and add your comments. It really helps my morale and huge motivator in bringing more useful content to you. Okay, let's take a look at Kotak Bank. Ooh, very strong up move with amazing volumes. Wow. Kotak Bank looking really, really good. Just breached above. See, this is a wonderful breakout, because you can see the stock has just gone above this whole resistance zone, which has been beating it down since the last 4-5 times. It just went above that, and just look at the volumes. I mean, phenomenal, right? It's a good idea to make fresh position here, considering how strongly the volume is trending. In fact, I am going to do that right now in one of my active client accounts, because I don't want to miss out on this opportunity. My god, it's going super fast. There you go. Wow, it is insane at how fast this is going. I had to do a market order. I usually don't do that, but I had to do it because I was not able to catch it anyway. So okay, so Kotak looks really good. So what I will suggest is that if you want to make a fresh position, absolutely go for it. Use a stop loss at the level of 1950, which is around 3.5%, and go for a target at give me a moment here. Go for a target. Yeah, considering the strong momentum, it should come back and retest this high at around 2200. So I told you a stop loss of around 3.5%, right? On the upside, we can easily expect a 9 to 10% target here, which means the risk reward ratio of more than 3. Very encouraging. Okay, so with that, we have pretty much covered everything that we had to cover in this session, and well in time, because we are also close to, the dedicated 45 minutes that I carve out on my calendar to bring these sessions to you. Now, just a reminder, I come live on YouTube and ET Live 3 times a week on Monday, Wednesday, and Friday, sharp at 2:30 p.m. On days when I'm not able to do it, I make it a point to, bring a substitution session. So usually it can be difficult to predict, but if you are part of my Telegram channel, then you will get the information in advance. In fact, I shared the link of my live session just 10 minutes before I come online, and give multiple reminders to join the session so that you don't miss out on what I'm sharing here. So if you're enjoying what and if you're benefiting from what I'm sharing in these sessions, please do consider joining my Telegram channel and subscribing to my YouTube channel. It's really, really helpful. I recently crossed 500 subscribers on YouTube, and it's a very big deal for me because it was my first milestone. With your support, I can grow my EXP Invest channel and EXP Invest business, take it to hopefully, bigger highs. So with that, I'll let you go. Thank you so much for giving me your time and your attention. I will see you again on Friday with the Market Outlook series, where I bring to you the market wrap, in which I basically discuss all things about which has transpired in the market. What are the key levels for Nifty and Bank Nifty? I discuss the intersector relative chart. I go over the analysis, the broad sector analysis, using a different sector indices. So if you're interested in that, do join me for a session on Friday at 2:30. Another thing that I just wanted to give you a quick reminder is that I am participating, or rather I've been invited by ET to speak in a virtual event. It's a all-women conclave called the Fantastic Five, where I will be sharing the virtual stage with 4 other women traders from India itself, where we are all coming online for you on Saturday to share our knowledge, our methodologies, and our strategies, which can help you become a better trader. Now, let me quickly just hunt for that link and share it with you in the comment before I leave. And it shouldn't be very difficult because I shared that link practically today in my Telegram channel. There I found it. Okay, so I shared this on LinkedIn, and as you might be aware, fantastic 5, I guess I should call it a webinar. Yeah, okay, webinar. So it's a LinkedIn link, but don't worry, just click on the link and you will be redirected to the webinars registration page. Okay, now I promise this was the last thing. I'm going now. Thank you so much for joining in. Namaste. I hope you'll join the session on Friday and Saturday. I'll see you there. Bye.